Hi, Tara. China, economically speaking, is not really in the strongest position to get into a prolonged retaliatory trade war or tech war with the United States, is it? And where then does that leave the outlook for China's capital markets, whether it's stocks, bonds, or the exchange rate?
Thank you for that question, Sri. If we plot a timeline of U.S.-China relations over the past decade or so, it's incredible how much the goodwill of most U.S. constituencies, not just the government, but also investor flows, has sort of dried up. If we look at U.S. investor flows into Chinese equities, bonds, and private equity, they have been collapsing over the past couple of years because investors have become increasingly disillusioned and disengaged from China's slowing growth, tighter regulatory policies at home, as well as, of course, this general souring of official U.S.-China relations. And the only constituency that's even engaging at all with China is U.S. businesses which have an eye on the Chinese market and which have deeply entrenched Chinese supply chains. While I think China is trying its best now to go on a charm offensive by making overtures to U.S. corporates to say do more business in China and also at least reviving these government-level communications, I think these charm offensives will do very little to revive portfolio flows in the short term unless we get some very significant and innovative policy actions to revive Chinese growth. And I'm happy to talk about some of my ideas for those as well.
Right, and you are short CNH on the exchange rate side of things. But my question, Tara, is whether, if this is the thin end of the wedge in terms of the state of play between the US and China and bilateral relations, does it negatively impact Hong Kong? Does it negatively impact Taiwan as well? We were just talking about the risks here on the geopolitical side. And within broader Asia, Southeast Asia, are there winners and losers here in terms of the supply chain redistribution story?
I certainly think there are going to be spillovers to the region. I would venture that Taiwan and South Korea have a very difficult balancing game to play now because on one hand, they are allies of the US, but on the other hand, they do not want to disrupt long entrenched supply chains with China. It's one reason why even in our own asset allocation, we're less focused on Northern Asia because of these concerns that they're going to be caught in the middle. And we basically have based our trades either on developed markets or, in the case of emerging markets, some selective emerging market names.